Welcome back. Well, let's focus on Prince Pipes and Fittings. That's the next management on the show. The company acquired Gujarat-based Aquel brand for around 55 crore rupees. The company is also setting up an in-house manufacturing facility and it's looking to expand its bathware presence. Well, to discuss this acquisition and the way ahead, we're joined by Mr. Nihar Chheda, the Vice President Corporate Strategy at Prince Pipes. Hi, Nihar. Good morning and good to see you in. Give us a few details of this. You're going to be spending closer around 55 crore rupees. Could you tell us the acquired unit, what kind of utilization levels is it at? I understand it's not too high. And at optimum levels, what kind of revenue can you generate from this acquired unit?
Sure. Yeah. Morning. Thank you for having me. So we have signed an asset purchase agreement for the acquisition of the iconic Aquel brand. And along with that, we have also purchased the plant at Bhuj, Gujarat for a total consideration of 55 crores. To answer your question, currently, yes, the utilization levels are low because of the balance sheet constraints that the target company had. But now with our financial muscle, we will be able to significantly increase the utilization because the distribution network is already deeply entrenched. So at peak capacity, we can manufacture around 1 lakh pieces per annum, which translates to a revenue of around 100 to 120 crores per annum. And also the total land bank is around 8 acres and more than 2/3 of the land is still available for future expansion. So once we completely spread out the asset, we would be pumping in more capital to further scale the bathware segment.
Oh, interesting. So 120 crores, so approximately, you'll be spending 55 crores and getting asset turn of close to around, 120 crores. Got that. Now, give us a few details. By when do you get to this optimum level? Do you think in FY26, FY25, if you could give us a rough number on that? And also, what kind of margins will you enjoy on this acquired business? You also mentioned the scaling up plans. So by when do you take a call on that?
Correct. So I think, to answer your question, today we are a pioneer and the leader in our core segment, which is piping. And we want to replicate that success in the bathware segment. And this acquisition is key to that. So this deal helps us in 3 ways, basically. One is we get access to a strong brand like Aquel, which has a very strong market recall, especially amongst key stakeholders like distributors, builders, architects. Second, now we have in-house manufacturing at Bhuj. And third, we have now a deeply entrenched distribution network for the bathware segment. So I think for the next 2 to 3 years, our focus will be to use our financial muscle as well as the brand to sweat out the asset. And I think over the next 2 to 3 years, only post that would we look to pump in more capital to scale the business further. Basically, this deal has just helped us accelerate our go-to-market for the bathware segment, which we have entered into only 6 months ago.
You want to give us the margin number as well?
Sure. So I think initially first 2 to 3 years, we would be heavily investing in manpower and branding. But if I look at over the long term, I think this business will have superior margins to our current piping business as well. So over the long term, 13 to 15% EBITDA margins are sustainable once we hit a certain threshold.
Okay. Nihar, hi, good morning. Prashant here. So roundabout in the range of what you make right now, right, in terms of margins there. Could you tell us how has fourth quarter been for the business, as it stood before you made this acquisition? Because in the third quarter as well, I mean, the volume growth was a little weak as compared to some of the other players in the segment. I think you lost some market share as well. Has the fourth quarter seen any improvement?
Yes. So, we had an ERP transition going on, which impacted our volumes. But we are back on track. And, we believe that the demand from the real estate and infrastructure segment will continue to deliver. And I would also like to highlight that our 8th manufacturing facility for pipes is on track in Bihar, where we acquired 35 acres of land from the Bihar government. We plan to invest 220 crores to put up a capacity of more than 48,000 tons per annum. We expect to commercialize commercial production from Bihar in 12 months from today, so Q4 next fiscal. And we are aggressively putting up capacity not only in bathware, but in our other 2 segments, pipes and water tanks. So we are aggressively adding capacity across segments, keeping in mind that the demand from real estate and infrastructure, not only in the current quarter, but over the next 2 to 3 years, looks to be extremely healthy.
Nihar, have you, two things. One, what is the capacity utilization as of now? With our, of course, the Bihar capacity will be important. What's the capacity utilization? And in the fourth quarter, what's the market share that you had across segments, if you can give us a sense?
Sure. So currently we're at around 60% capacity utilization. In our business, once you start reaching 70% capacity utilization, that's peak. So which is why we have been ahead of the curve with adding capacity in Bihar, which is going to be critical for growth in the eastern part of India, which is growing at a fast pace. And currently, we are at around 7 to 8% market share in our core business, which is piping. So around 40,000 crore market size, and we would be around 7 to 8% of that currently as we speak. Our second vertical is water tanks. Total industry size would be around 5,000 crores. We've entered that segment only 2 years ago, so it's nascent times for us. And bathware today would be a 15 to 18,000 crore market size. So the total addressable market for us now becomes around 60,000 crores. And I think this is an opportune time for this kind of an expansion with the way real estate and infrastructure demand tailwinds are currently.
Can you just give us a final figure on the volume growth? What are you expecting to see? And can you break it up for us between agri and non-agri? I didn't get that number.
So I'll stay away from quantifying growth in the middle of the quarter, but I'm happy to give a directional view. So the demand from non-agri, which is around 70% of our business, continues to be strong. And demand was strong in the previous few quarters. So only due to our transition did we have some supply chain issues, which are now completely resolved and behind us. And the rest of our portfolio, around 30%, which is agriculture, we are also now seeing strong demand, which is a seasonal business from Jan to June. But now that commodity prices of PVC are extremely low, our finished good has become extremely affordable, which is another tailwind for demand. So with the tailwinds of real estate as well as affordability coming back in both raw material and finished good, makes us more aggressive and bullish on demand going forward.
So I understand that you don't want to give us any specific volumes, but if you look at the trajectory, right, in terms of tons, the last 3 quarters have seen a rise. So there was 37,000 tons in the Q1, then it went to 40 and 41. By Q4, do you think it will be better than the preceding 3 quarters? Just trying to understand the trend.
No, of course. So quarter 4 is, traditionally has always been the best quarter for us, for the industry as well as for us. And quarter 4 volumes will be, significantly higher than the first 3 quarters as well.
Okay, all right. We'll leave it there. Thank you very much for joining us, Nihar, and great speaking with you, and a really good sense of the business as it stands right now. Good luck to you with the new acquisition and, of course, the capacity expansion in Bihar that you spoke about as well.